This is the Sunday Business Page with Jon Delano.
Good morning. I'm Jon Delano. Welcome to another edition of the Sunday Business Page. And our very, very special guest today is Gus Faucher, who is the senior economist, the chief economist for PNC. And Gus, it's always a pleasure to have you on the show. Thanks for joining us.
Well, thank you very much for having me, John. I really appreciate it.
I wanted to have you on because since the election, the presidential election, we've seen a bit of volatility, ups and downs in the stock market. And as you know, more than half of Americans, many of us with our 401ks, our IRAs, our retirement accounts, we're invested in the stock market, so we care what happens. Does the presidential election have much of an impact on the market?
I think we have seen stocks up generally since the election, and I think the expectation is that corporate profits would be higher under a President Trump than they would have been under a President Harris. A couple of things. I think that President Trump is more likely to reduce corporate taxes, and so that means companies would have higher after-tax profits. And then there's also a sense that the regulatory environment could be a little bit looser under a President Trump than we would have had under a President Harris. And again, that's a positive for corporate profits. And higher profits mean more money that businesses can return to their shareholders. So we have seen a generally positive reaction, but there's still lots of variability in the stock market and still lots of things for markets to respond to.
And I do think, if I, of course, remember the lessons from you over many years, uncertainty is something folks do not like to see when it comes to investing in stocks and bonds. And there is uncertainty about the quality of some of the president-elect's appointments. And of course, this big concern over whether he will, as he has the power to do, unilaterally raise the prices of all foreign goods coming into America. Is that affecting the market in any way?
Absolutely. I think that the market is waiting to hear what the president-elect says in terms of tariffs. That would certainly raise prices for many American consumers and reduce demand for imported goods. It could benefit some American manufacturers. It could hurt other American manufacturers who import some of the inputs that they use in their products. And then, as you mentioned, the president-elect has announced some appointees. There are others to come, and markets certainly will take a view on whether they think that those appointees are good for the economy or good for business. So until we get answers to a lot of these questions, I think we'll see continued high volatility, at least in the near term.
I do think it's interesting that for many years, it seems as if presidents want to take credit for the economy and for the market. President Biden had a wonderful market, and it basically over the last couple of years, everybody's stock investments have gone way up under Biden, but he didn't get any credit for it. Donald Trump, of course, is coming in. He wants to take credit. I'm sure he will try if the market goes up. Is there really any relationship between our stocks and bonds and whoever sits in the White House?
Well, certainly the president does have some control over economic policies, and to the extent that those affect the economy, they can affect corporate profits. That being said, a lot of what goes on with the economy is out of the president's control. Some of it is under the responsibility of the Federal Reserve. There are always external events like the pandemic that hit, that the president can try to adapt to, but certainly have big impacts on the economy, absent any responsibility from the president. So I'm sure that President-elect Trump will try to take credit for the big jump that we've seen in stock prices, just like President Biden tried to take credit for the big increases in stock prices that we saw during his term. And then the other point is that you mentioned the fact that the stock market did well under President Biden. The labor market was good, but we obviously had very high inflation, and I think to some extent the voters held that against President Biden, even though it's primarily the job of the Federal Reserve to control inflation. But good or bad, I think the public holds the president responsible for whatever happens to the economy during their time in office.
I'm sure we're going to see that again. Well, Dr. Gus Faucher, the chief economist over at PNC, thank you, sir, very much for spending time with us. It's really good to be with you.
Well, thank you very much for having me, John. I really appreciate it. And I understand that you're going to be moving away, at least from full-time work at KDKA. So congratulations on a fantastic career. We really appreciate all that you've done for the Pittsburgh area.
Well, thank you, Gus. That's very kind of you to say. And thank you for watching this edition of the Sunday Business Page. Have a great Sunday, everybody.